It's summer 2007. The first ever iPhone goes on sale. A train strike has paralysed Germany. Stuttgart are national football champions. The world's most powerful politicians are meeting on the Baltic. There's a burgeoning financial crisis in the US. And the Rolling Stones are on tour. In July, they stage an exclusive concert in Barcelona for 200 Deutsche Bank investment bankers and their clients.
You know, I was right at the front of the stage I could have grabbed Mick Jagger's foot. And then he said, and the great thing is, the money we're getting for this is coming out of your bonuses. Huge cheers.
At the same time, there's growing certainty on New York's stock exchange that a major financial collapse is imminent.
And so from feeling kind of quite buoyed up by seeing the Rolling Stones, you know, I went to bed that night kind of feeling that we're just about to potentially blow up.
It's a mega event taking place on the brink of an abyss. The exclusive Stones performance reportedly cost more than $4 million. Up on the 32nd floor at Deutsche Bank, Josef Ackermann was CEO at the time. His aim to make it the world's biggest bank had left him reliant on the world of investment banking. And so he'd turned a blind eye to such escapades.
Wussten Sie eigentlich von diesem Konzert?
Did you know about this concert?
I don't think so. I didn't, well, perhaps I knew there was a concert, but I wasn't involved.
They might as well have played the gig under a massive sign saying this is the top. You know, that this was a kind of emblematic of the sort of slight madness of the banking industry.
Such opulence is now ancient history, and Josef Ackermann has also long since vacated his chair at Deutsche Bank. But his time as CEO still shapes the institution today. In the years that followed the Stones fiasco, the once reputable name of the financial institution was dragged through the mud. Its reputation still hasn't recovered to this day. This is Französische Straße in Berlin's Mitte district, the birthplace of Deutsche Bank. It was founded in 1870 in an unassuming building that's long gone. The founders, led by private banker Adalbert Delbrück, wanted their safes to offer their clients security for their deposits. But in their first 10 years, they instead focused on conquering world markets and providing loans for the pre-export financing market.
I would definitely say that they were strongly motivated by the goal of founding a strong German bank, and also to make Germany economically strong internationally. It wasn't just business, but patriotism that also played a role.
The export market collapsed, however, with the start of World War I in 1914. The still fledgling Deutsche Bank was facing ruin.
The foreign branches had to be closed one after another. They developed several strategies to compensate. One was to grow its client base inside Germany. Another was for Deutsche Bank to get very heavily involved in financing the war economy during World War I.
Finanzierung der Kriegswirtschaft eingestiegen.
1929 saw the next existential crisis, Black Tuesday. Devastating stock losses on Wall Street triggered a global economic crisis that heralded mass unemployment and social strife all over the world. The impacts of the Great Depression also reached Deutsche Bank's new Berlin headquarters. The darkest chapter in Deutsche Bank's history came in Auschwitz 1943. This time, the banking institute was not only financing the war economy, but also the Holocaust, the systematic murder of Jews and other minorities. The bank's branch in Katowice guaranteed loans to Topf & Sons, the company that made the incinerators for the Auschwitz crematoria. Starting in 1937, Hermann Josef Abs was boss of Deutsche Bank.
Abs hat nach 1945 selber gesagt.
Abs himself said after 1945 that he didn't want to be counted among those who said they had known nothing. He indirectly admitted that he'd been quite aware of the crimes being committed by the Nazis.
In 1954, the country was getting back on its feet. West Germany won the Football World Cup. The German economic miracle had begun, but so too had the Cold War. The Soviet Union launched Sputnik, the first satellite into space. Deutsche Bank was finally reformed in 1957, this time in Frankfurt, not Berlin. It had been broken up by the Allies after the war. And in spite of his role in the Third Reich, Hermann Josef Abs returned as chairman.
Hermann Josef
Abs was a convicted war criminal, but they needed Deutsche Bank after the war. There was starvation, nothing to eat, no heating. Half of the country lay in ruin. They needed leaders who knew how to do business, who had contacts and could get things done. And Abs must have been appointed back to his post at the discretion of the Allies.
Gutdünken der Alliierten gewesen sein, dass Herr Abs dann wieder ins Amt gehoben wurde.
Cattle drive in Switzerland's Sarganserland. While Hermann Josef Abs was hoping to win back Deutsche Bank's reputation in the late 1950s, his future successor was growing up in the Swiss mountains. Josef Ackermann was the first of three sons of rural physician Karl Ackermann and wife Margret. He loved sport and music. And whatever Ackermann did, he wanted to win, sack racing included.
He was born ambitious. I think his father was a person that demanded it.
After his military service, Ackermann studied business in the Swiss city of St. Gallen, after briefly considering following his father's footsteps in medicine. After graduating, he turned down an offer for a future in academia. Instead, he pursued a career in 1977 in banking with Credit Suisse in Zurich. Back then, most banking took place manually at the counter. Bankers kept accounts, exchanged currencies, granted loans and traded in shares. It wasn't anything spectacular, but bankers did make money doing it. Loans were the biggest business for banks at that time. The banks lent money to small and big customers, cashing in on the interest. Or they traded shares and currencies for a commission. Year by year, Ackermann ascended the career ladder at Credit Suisse. He was on the brink of taking over leadership of the entire bank when, out of the blue, everything came crashing down.
In 1996, he suddenly walked. He left the bank. His departure came after a power struggle, which he had basically lost.
The same year, Ackermann had a new opportunity in Frankfurt. In its twin towers, Deutsche Bank was looking to fundamentally revamp its business model and finally become a global player. Chief executive at Deutsche Bank, Hilmar Kopper, brought Ackermann into the fold. At the time, Kopper was facing a considerable problem. Disgraced German real estate tycoon Jürgen Schneider had been extradited from the US. He was a former client, and things were threatening to become very embarrassing for Deutsche Bank.
Schneider war ein genialer Hochstapler.
Schneider was a brilliant fraudster. He bought up old real estate and restored buildings without any consideration for cost. His last project is unforgettable. It was on the site of a department store in Frankfurt's Zeil district, and he falsely inflated its value, all in the view of the Deutsche Bank towers. Then, when they could no longer deny what was happening, Deutsche Bank turned the tap off. But it was too late, and you had all these contractors waiting to be paid.
When Schneider initially fled to the US, Kopper had played down the damage to Deutsche Bank.
This isn't a lot of money. We estimate that for all three projects that we're talking about, the three that involve Deutsche Bank, are very clearly under 50 million marks. We're talking about peanuts here.
Peanuts? Kopper made it sound like 50 million Deutschmarks, 25.5 million euros today, was spare change. An enormous display of arrogance from the banker, especially given the financial consequences to the construction companies involved. So when this smart Swiss banker turned up in the form of Josef Ackermann, it suited Hilmar Kopper to polish up his bruised image.
It was certainly a new world for me, but I soon felt at home and sensed that not all that glitters at Deutsche Bank is gold. I saw that I could bring something to the table, a way of doing things that was better back in Switzerland.
At the time, and despite the peanuts incident, shares in Deutsche Bank were stable and trading at around 28 euros. But for the ambitious Ackermann, it wasn't enough. He wanted more.
Auf der Suche nach dem eigenen Weg ist ein Gespräch unter vier Augen durch nichts zu ersetzen. Plötzlich entdecken sie, wie wichtig es ist.
As this TV ad shows, Deutsche Bank still highly valued its relationships with private customers. It wanted to show that it was serious, reliable and trustworthy.
Mit dem sie sich beraten können. Vertrauen ist der Anfang von allem. Deutsche Bank.
But at the end of the 1980s, a new era began in London's financial centre. Investment banking was the buzzword at the time, marking a radical change in the industry.
The decision to join the big players at a global level was, of course, something quite different to the original concept of Deutsche Bank when it was founded 150 years earlier.
That was the end of the traditional house bank principle, where a company had a close relationship with a bank and got its loans there.
Investment banking is about trading in raw materials, currencies and bonds, whilst using the bank's own money or the client's. The high sums that traders juggle mean that even the smallest currency fluctuation can lead to massive gains or losses. Risk is the name of the game. In 1996, new board member Josef Ackermann took over the investment banking sector at Deutsche Bank.
Joe Ackermann really believed in the investment bank. He believed that was a sound way of Deutsche Bank becoming a universal bank covering every client all over the world. So he put a lot of pressure on the bank, the investment bank, to make money. And then if you made money, there was pressure to make more money. And then the next year, more money.
The employees on the trade floor of the investment banks came up with increasingly complex financial products. The only thing that counted was the profit, which dictated the size of their bonuses. In order to profit, you had to take risks.
Taking risk is the lifeblood of these people. And the notion of turning down possible money-making opportunities because they're too risky, that's just not in their DNA.
The culture on Wall Street was definitely shaped by this very male-dominated business. It was all about, my bonus is bigger than yours. They lived in their own world. They pursued the kind of lifestyle that they perhaps couldn't otherwise have afforded, especially in the US.
Investment bankers live in a world of their own. It's a money machine that outsiders have no chance of completely understanding, including the boss.
It's impossible, even as the boss. Thousands of products are being developed. Even if you had to sign off on every one of them, you'd have to look at them in detail. I don't think that's possible.
Unlike his boss, Mr. Ackermann, this man, Edson Mitchell, was a man that understood investment banking inside and out. Deutsche Bank had poached him from the competition, and with him, their best employees.
Edson Mitchell was
the bank's so-called rainmaker. Rainmaker is the term for an employee that brings in unbelievable sums of money. So Ackermann knew right away his standing was riding on the standing of Edson Mitchell and the role of Edson Mitchell.
Edson Mitchell became, I think, in many ways, the worst nightmare of Joe Ackermann, because here's this American who is so bold and brash. They thought that the future was in sales and trading and investment banking, and this very kind of cowboy type of business that the Americans had perfected and that the Europeans really needed to rush to catch up.
Jetting between London and New York on the Concorde, Edson Mitchell would fire up his shirt-sleeved buddies with exorbitant bonuses and wild parties. Greed appeared to be his recipe for success. London and the Grosvenor House Ballroom. On December 21, 2000, Deutsche Bank's investment bankers celebrated Christmas with their best clients.
Mitchell takes the stage, the Mission Impossible theme song is blaring, and he declares to this crowd that next year's going to be even better than the last, and essentially the message is we are conquering the world.
Among the guests were a number of escorts.
And one of the things that they would do was hire young women to serve as wait staff and kind of flirt a bit with the customers. So they developed a system where pinned to their little black dresses would be these blue ribbons, which would mean that I'm a staff, I'm fair game.
Das gehört ein bisschen dazu, dass man halt die Kunden. That's a part of it too. Entertaining the clients and treating them well. Some things probably go too far. Dann zu weit gehen. But enforcing restraints would have violated the investment culture. Zu unterbinden, das wäre so ein Eingriff gewesen in, sagen wir fast, die Investmentbankkultur.
What kind of culture is that? What kind of people are they to be kept in line by offering them these types of events? It shows what kind of depths the bank had sunk to.
The day after the Big Bash, Edson Mitchell was due home in Rangeley, Maine for the Christmas holidays. But the private jet that he boarded in Boston never made it. It slammed into a mountain on its descent. The pilot and his passenger, Edson Mitchell, were killed immediately.
I went to nearly all the memorials and made speeches. It was a significant loss for the bank. And of course, people were wondering who his successor would be.
When Mitchell dies, there is this power vacuum and just all hell breaks loose as a result of that cultural shift that he had introduced.
Ackermann named Anshu Jain to succeed Mitchell.
People that worked in Edson's world didn't really trust Anshu, and that would be problematic to put him in that position. I said so directly to Joe Ackermann.
Was it a big mistake of Joe Ackermann?
I would say yes. high tolerance for risk that I think in the end did not serve Deutsche Bank well.
Starting in 2001, Anshu Jain was in the driver's seat. He had a reputation for not being particularly careful, something Kvalheim feared. Ultimately, the previously respected Deutsche Bank would lose their reputation under his watch. In 2002, the euro became the EU's official cash currency. Michael Schumacher won his 5th championship title. Gerhard Schröder secured another term as German Chancellor in coalition with the Greens. And German media mogul Leo Kirsch declared bankruptcy. A few years earlier, Hilmar Kopper, Mr. Peanuts, had been replaced by Rolf E. Breuer. When Breuer cast doubt on the credit standing of his client Leo Kirsch during a TV interview, it turned into a fiasco.
Eine Hausbank, für die gehört
A house bank is meant to protect its customers.
mitten im
To say right in the middle of a deal that he won't be getting any more money, you can't do that. That crucified the businessman Leo Kirsch. After that, it was over.
Danach war Schluss.
Leo Kirsch sued Breuer and Deutsche Bank in a legal battle that lasted years. After his death in 2011, his heirs were awarded around €1 billion.
Betraying their client, Leo Kirsch, proved very costly for Deutsche Bank.
9/11 hit Deutsche Bank hard. Their Manhattan offices were badly damaged when the Twin Towers collapsed and had to be demolished. But every catastrophe offers the chance of a new beginning, and Deutsche Bank moved to Wall Street. By the annual meeting of May 2002, Josef Ackermann had finally reached the summit and became the first non-German to head the institution. Ranked internationally, Deutsche Bank's balance books put it in 5th place. For Ackermann, not high enough. Ackermann wanted to be the best on Wall Street. Deutsche Bank's shares would be listed on the New York Stock Exchange a few months later. Ackermann wouldn't let anything stop him. Just like the sack race way back when.
Die Deutsche Bank hat operativ
During the 90s, early 2000s, Deutsche Bank was effectively earning very little, if anything. And I said, if we want to play a global role, then we have to be as profitable as our rivals. Our capital yields at the time were relatively small, pulled from also quite small capital reserves. Before tax, at 25%.
Looking back, it seems almost insane. 25 is a lot of return on equity. At the time, it didn't seem outrageous because a lot of banks were making similar kind of returns.
When Josef Ackermann took control in 2002, the share price was at €59. It had more than doubled its value since 1996. But could this continue? By early 2004, Ackermann already appeared to be standing on the precipice. He faced trial after the takeover of German telecoms giant Mannesmann by British mobile phone company Vodafone. Ackermann had been on the supervisory board that had approved a bonus worth millions to its then chairman, Klaus Esser. Was this an abuse of trust? The image of Ackermann showing a victory sign before the trial remains emblazoned in many memories.
You'd expect the chairman or executives of Germany's biggest bank to keep things under control. That's why they get big money. They're paid well so things like this don't happen. So when something like this happens, you wonder, was it all intentional? Copper, peanuts, Breuer, Kirch, and Ackermann, victory. This series of faux pas by Deutsche Bank chairmen or executives was peculiar.
The trial against Ackermann was settled finally with a €3.2 million payout. Under the court's terms, Ackermann didn't admit guilt and was allowed to stay as head of Deutsche Bank. But now he was under pressure. He knew he had to deliver. London, and Deutsche Bank's money machines were running at full tilt. Anshu Jain was using the promise of bonuses to drive his workers to make money, much more money.
The bonus system has various psychological and economic structural consequences and conditions that I regard as extraordinarily detrimental. It causes greed to set in, and the hunger for more and more and more money kind of becomes insatiable.
If you messed up a transaction and lost money, there was no great disincentive except that you might lose your job. But the next bank would be there waiting to snap you up.
It's a massive thing psychologically, being able to recognize when greed or striving for profit has become too much.
That's what Ackermann says today. But it seems that back then he had little interest in preventing legal and ethical boundaries from being pushed further and further. Internal emails later proved that a number of traders were manipulating interest rates and engaging in illegal business deals.
Here an employee writes in London, "I think it's simple. This is fraud." Here you've got a Deutsche Bank manager claiming this is fraud, and then Deutsche Bank gets involved. No one asks, should we get involved in an illegal business deal? What they're saying is, this is illegal. But how big is the risk of us getting caught?
Deutsche Bank later ended up paying fines of $2.5 billion for manipulating interest rates and violating US sanctions between 2003 and 2005. It's the mid-2000s and Deutsche Bank throws a Christmas party in a Milan nightclub. Time once again for the investment bankers to go wild.
Deutsche Bank über alles. I wasn't bothered by that. And the clients appreciated it, I should add.
Anshu Jain knows he has to keep his team on his side, for example by paying go-go dancers from the firm's coffers. This time they're not wearing the little blue ribbons on their outfits. By 2006, Deutsche Bank was a fixture on Wall Street. Profits were surging. But a storm was brewing, and it all had to do with the subprime mortgage market. His analysts tip off Josef Ackermann, warning a gigantic crash was likely. But what could Ackermann do? Deutsche Bank was heavily tied up in the dubious deals in the US mortgage market. Houses everywhere went up for sale. Many banks had taken high risks with their mortgage lending. Now they had to offload those bad assets as quickly as possible.
Many people just didn't want to believe it. I was even criticized inside the bank, or felt resistance, because I said what's happening is not good. We had to get rid of the risk and sell it off.
You had Anshu Jain's team, who were stuck right in there. They thought everything would work out fine. Then there were people who said it couldn't work. They said, what you're doing is alchemy, trying to turn lead into gold.
It's Barcelona, July 2007. The crash is coming, and everyone knows it. But Anshu Jain's investment bankers are living it up at an exclusive Rolling Stones concert, giving the impression it's business as usual.
The key is to be able to estimate the risks well enough to be able to carry on dancing while the music plays, but notice when the musicians are getting tired, as it were, and then get off the dance floor early, just in time.
The Düsseldorf-based IKB Deutsche Industriebank cleared the dance floor a bit too late. They were one of Deutsche Bank's New York clients. At the end of July 2007, 2 weeks after the Stones concert in Barcelona, the financial services company was facing bankruptcy. The IKB executive had mistaken Ackermann's lead for gold.
Deutsche Bank helped create these products in the U.S., which contained bad loans. It packaged them so you didn't know exactly what was in there, and then sold them.
Yeah, but we didn't force it on anyone. We sold them these products because they were asking for them.
The dumb money from Düsseldorf.
The dumb money from Düsseldorf. The IKB was one of the last players in that market and had no idea what kind of storm was brewing.
Sich was zusammenbraute.
Deutsche Bank's former chief economist under Josef Ackermann and his right-hand man has a harsh verdict on the IKB deal.
Ich würde mal sagen,
legally speaking, I'd say it was IKB's problem. Morally and ethically, they should have held back sooner. But they didn't, because these products had a nice profit margin.
Bei diesen Produkten eine schöne Gewinnspanne drin war.
A number of rescue packages had to be secured to prevent IKB from going bankrupt. In the end, private banks paid 1.5 billion euros and savings banks around 370 million. The lion's share, though, was covered by the German National Investment Bank, the KfW. It covered more than 7 billion euros. The KfW itself needed huge amounts of tax money so it could survive.
Although I don't like saying it as a market economist, state support was the only way.
Ingrid Matthäus-Meyer, the then head of the KfW, criticises the fact that the Deutsche Bank under Ackermann had to be bailed out by the taxpayer.
Ackermann had to mitigate the risks he'd largely instigated himself by selling the IKB these products, these bad assets, by passing off the costs onto the KfW, the National Investment Bank. That shows what made Ackermann tick, and basically how lacking in scruples he was.
Had Josef Ackermann gambled and lost everything? Following the IKB crisis, Josef Ackermann returned to Switzerland and a village in Ticino, like every summer. Meanwhile, the creaking sound of the international financial system was becoming hard to ignore. Ackermann knew he had to face the public. Deutsche Bank's reputation was in tatters. Ackermann went on a popular television talk show to offer his remorse, and he insisted on appearing alone.
When things are going badly, it's fair to say you've made a mistake. And Deutsche Bank made mistakes in this crisis too. You have to admit it, try to correct them, and learn from them.
Years later, Deutsche Bank would find itself being held to account in the US for these very mistakes. To avoid criminal proceedings, Deutsche Bank in 2017 reached a $7.2 billion settlement. In addition, it already had to pay out $1.9 billion in compensation in 2013 to 2 US state mortgage lenders. In total, Deutsche Bank had paid out $9.1 billion. It was the biggest penalty paid out during the Ackermann era, but it wouldn't be the last. Just a few months later, the Wall Street crash. On September the 15th, 2008, investment bank Lehman Brothers declared bankruptcy in the wake of the US subprime crisis. A domino effect threatened to trigger the same fate in other banks. The global financial system was on the brink. On stock exchanges around the world, traders frantically tried to save what they could.
For Deutsche Bank, it actually wasn't that bad. We were relatively well prepared for a collapse like that.
Auf so einen Kollaps.
At the German Chancellery, one crisis meeting followed the next. The government's priority was preventing German savers from panic, or chaos would ensue.
We're saying to savers that their deposits are secure, and the German government guarantees that.
The German government feared another Black Tuesday, like the one in 1929, when so many people lost their savings and then their jobs.
Es gibt ein paar Parallelen, also zum einen natürlich diese großen.
There are a few parallels. Of course, you had these huge risks that the banks were taking, that they didn't expect they would have to guarantee. Before 1931, it was mainly the credit boom, and in the 2000s, it was mostly the international financial market.
Den internationalen Finanzmarktgeschäften.
In October 2008, the International Monetary Fund met in Washington as frantic efforts continued everywhere to stop the global financial system from collapsing. Josef Ackermann was now being regarded as an international firefighter, even though his bank was among the arsonists. At the same time, another fiasco was unfolding for Deutsche Bank. A property developer had defaulted on a construction loan worth millions of dollars in, where else? Gambler's paradise, Las Vegas. Today, the Cosmopolitan Hotel is a complex of superlatives. It has more than 3,000 rooms, more than 5,000 employees, hundreds of slot machines. But in the midst of the 2008 financial crisis, Deutsche Bank inherited the half-built project when its developer declared bankruptcy.
Es war eine Baugrube. It was a building site. For 10 years, it would have been known as the Deutsche Bank building site. And banks are responsible for what these projects look like. Primarily, it was about reputation.
So they said, we won't write this off. We'll finish building it and sell it. And if we have to write off debts, then we'll do it. But only when the financial crisis is past its peak and we have money again. Then people will hardly notice.
An expensive mistake for Deutsche Bank, as it turned out. During that period, Ackermann was a regular guest of the German cabinet. The government was planning a state rescue package for German banks. Ackermann countered the measure with a statement saying he would be ashamed if Deutsche Bank was among those needing a government bailout. Many saw this as Ackermann giving his victory sign again, verbally this time. The Chancellor didn't like it. Commenting via her spokesperson, she called Ackermann's statement incomprehensible and unacceptable.
He shouldn't have said that. But I think he meant that as captain of the ship, at least he didn't run his ship aground. And if he had, then he'd have been ashamed to go straight to the state.
It's not just about state money, but it's about the state's influence. Pay would have been monitored and limited to a maximum of around 500,000. And for Deutsche Bank's investment banking, that would have been bad. We'd have lost a lot of employees.
Shares in the bank had plunged from an all-time high of 88 euros in April 2007 to just 16 euros by January 2009.
I think it's pretty clear that after 2007-2008, and particularly with the regulation changes that came in afterwards, that Deutsche Bank should have probably altered its business model quickly, and it didn't.
But Anshu Jain and his London crowd didn't want to change their model. On the contrary, driven by arrogance and greed, they were diving deeper and deeper into shadier practices. As early as June 2008, Ackermann in Frankfurt had an angry phone call with Anshu Jain. Ackermann complained about the cultural deficits of the investment bankers and said he would not tolerate it any longer. Those were the findings of a later banking supervisory probe. But it also found no action was taken.
Ich habe zwar immer gesagt, dass, glaube ich, seit 2006.
I always said that, I think since 2006, no business is worth damaging the reputation of the bank. And that was absolutely clear from the top down at the bank. However, not everyone followed that rule.
Wurde es nicht von allen so befolgt.
The annual windfall from London was a decisive part of Deutsche Bank's profit. Josef Ackermann was reliant on his golden goose, Anshu Jain. And by 2009, Jain had even been promoted to the board of Deutsche Bank. It's New Year's Eve 2010, and in Las Vegas, Deutsche Bank staged a mega party to mark the opening of the Cosmopolitan. The bank pulled out all the stops, shelling out $12 million for an event featuring Jay-Z and Beyoncé. By the time a buyer was found at the end of 2014, the hotel was running a $1 billion loss.
How high were the losses?
I can't say exactly, but it was certainly over $1 billion.
Über eine Milliarde.
Ultimately, the financial losses reached almost $2 billion. By the end of 2010, Deutsche Bank's name was tarnished. The world of global finance now mocked Joe Ackermann as the man who took too many risks, and not just with hotels in Las Vegas.